I'm Danielle Hale, Chief Economist at Realtor.com. In May, we are squarely in the heart of moving season. With buyers, sellers, and renters actively in the market, here's what you need to know. The U.S. economy continues to grow, but showed signs of slowing in the first quarter. GDP advanced at a slower pace, in line with expectations of gradual cooling. Similarly, the labor market eased, with companies adding just 175,000 jobs in April. Unemployment ticked slightly higher, and wage growth also cooled, consistent with moderating momentum, which should diminish inflationary pressure. In its May meeting, the Fed not only kept its policy rate unchanged, its statement updated very little. The Fed continues to target 2% inflation, and while it acknowledged the recent spate of higher inflation as a lack of further progress toward its goal, the Fed anticipates that a policy rate cut will most likely be the appropriate next move. The big question remains, when? And the timing will continue to depend on the incoming data and evolving outlook. The Fed meeting seemed to quell investor concerns about the outlook, and Treasury yields began to dip, a trend that was reinforced by the more moderate jobs report. Mortgage rates followed suit, dipping after a 5-week streak of gains, but they remain above 7% and likely will until inflation edges back toward 2%. Against this backdrop, the Realtor.com April Housing Trends Report, authored by Sabrina Speianu, showed that growth in the number of homes for sale continued as more homeowners choose to sell, driving newly listed homes 12% higher. Although listings continue to trail pre-pandemic levels by a large margin, nationwide asking prices were flat as areas with growing and shrinking prices offset. Affordability continues to be stretched, with the income required to finance the typical for-sale home above $100,000 in 34 of the 50 largest markets. Markets in the Midwest, Northeast, and South top the list of areas with the lowest required incomes. Similar trends were at play in the 2024 housing market ranking that my colleague Hannah Jones compiled in collaboration with the Wall Street Journal. Relative affordability and high quality of life helped propel Rockford, Illinois, to the top of the ranking. March existing home sales dipped slightly following February's big jump, and more moderation could be ahead. But March pending home sales rose, suggesting a possible acclimation to higher mortgage rates. Finally, as we move into graduation season, economist Jai Shu leveraged Realtor.com rental data and a host of other indicators to identify the top rental markets for recent college grads. These cities offer grads culture, lifestyle, and plenty of personal and professional opportunities without the same price premium of the largest markets. You'll find all the details, including full reports and our housing data for download, at Realtor.com/research. You can also follow us on X, formerly Twitter, for real-time updates.